Let's take a look at your market news now. Asian markets mostly fell on Thursday as US President Donald Trump's ban preventing US companies from using foreign telecoms equipment jolted investors who saw it as targeting Chinese providers and risking another flare-up in an already tense trade war. The president insisted that the executive order, which he based on national security grounds, was not aimed at any particular country, but it's the latest move in a row that has seen Washington raise concerns about the spying threat posed by China's Huawei. Tokyo stocks closed down despite conciliatory messages from Washington on trade as investors remained worried about how the US-China row will develop. The benchmark Nikkei index fell over 0.5%. Hong Kong's Hang Seng was mostly unmoved at close, while the Shanghai Composite took up 0.2% to 2,955 points. Wall Street stocks climbed for a second straight session on Wednesday after the US sent more conciliatory messages on trade, offsetting lackluster economic data. The Dow Jones Industrial Average finished up 0.5% at 25,648 points. The broad-based S&P 500 gained 0.6% to 2,850, while the tech-rich Nasdaq Composite Index jumped 1.1% to 7,822 points. Let's go now to the Johannesburg Stock Exchange. My colleague Arabile Gumede is standing by. Very good afternoon to you, Arabile. What's taking place in the markets this afternoon?
Yeah, good afternoon, Nzinga. Well, the market has certainly been on the mend today. It started off in some negative territory, even though it was only just, but now it's moved up into some positivity, over 0.33% to the good thus far. So things are faring a little bit better. Of course, some negativity of late, having even seen the market shift towards that 55,000 point mark. We had hoped to test 60,000 points, but now it's going to be a lot of hard work to get to that point. A whole lot of issues, such as, of course, the China-US trade talks have been at the fore of this market movement, of course, for some time now. And the Huawei situation with regards to a sanction on them being allowed to buy any sort of equipment from a US company without government approval has certainly come to the fore. And now the United States putting that forward, and that puts another spin in that trade situation. All of that, and of course South Africa's economic woes continuing. Moody's putting out its statement earlier today as well, so that is bound to set a bit of a motion as well, though they do believe that South Africa's debt structure isn't necessarily as bad as we think it is. But things are faring a little differently across the globe with a whole lot happening. Let's unpack exactly what the market looks like, and we'll get into the numbers in just a bit. Yeah, as you can tell there, the market really going much higher there. Of course, a lot of green across that market picture. So we certainly will unpack exactly how things are faring and why exactly things are going positively on the local front. Chantel Marks from FNB Wealth and Investment joining us in studio. Chantel, thank you so much for the time. It's been an interesting one. The market now 0.5% better off, having started in the negative. Where the heck are we going?
Yeah, I mean, it speaks to the volatility that we've been seeing in global markets generally. And really, it has almost nothing to do with South Africa. It has almost everything to do with Donald Trump's schizophrenic trade tweets. So on the one hand, they are actually taking quite a hard line against the Chinese, but in the same breath, they're basically extending the implementation of tariffs on auto imports from Japan and Europe. So they're being a little bit nicer to Japan and Europe. Then this morning we wake up with news of the fact that they are actually so negative towards the Chinese, although they say it's unrelated, that Huawei is going to be barred from doing any sort of business with US companies.
Yeah, that and 70 affiliates, right? It sends a clear message then as to them trying to protect. Perhaps it's not only just the Apple versus Huawei situation, but certainly the infrastructure with regards to 5G networks and the telecom, and even the issue of spying. Now that becomes a different situation considering what we had with the 2016 election. A whole lot going on there too.
Yeah, what's become very interesting is the fact that they they tend to not necessarily be very logical in their approach towards Huawei. So on the one hand, they're saying, okay, the spying issue is a problem. So from a large scale 5G network hardware perspective, they don't necessarily want Huawei to do business in the US. Then you have the competitive positioning relative to Apple, where it's been gaining a lot of market share. But what I find quite interesting is that it now seems to be barring Huawei from doing business with US companies that supply Huawei. So Qualcomm, for example, is the largest 5G modem producer in the world. And they, well, more recently, they are now providing Apple with 5G modems to put inside their smartphones. But they also importantly provide Huawei with that technology. And now they're going to have to get special permission in order to supply that to Huawei. Huawei actually can't produce a phone without that component. And for Qualcomm, it's their largest it's their largest client.
So clearly then Qualcomm will probably go to the US government and say, well, listen, you're kind of killing us here. And that seems to be the case with everything else that Donald Trump has done. The farmers have complained. Shipping industries have certainly complained, saying these tariffs that you've put on China have certainly hurt our businesses.
Yeah, there seems to be an approach of implementation without necessarily thinking through all the impacts of these actions. It was a similar thing with the previous kind of trade tariffs that were introduced. A big problem here seems to also be the grasp of what the actual impact is and who the actual impacted party is from Donald Trump. We know one of the people who used to be close to him in the White House, but had since been let go, recently said that he does not understand that it is ultimately the US company and consumer who bear the cost of the tariffs and not the Chinese physically paying out tariffs. So when you're dealing with someone who's struggling a little bit with that kind of logic, then something like this happens, and then you have to go back and try and unwind the impact.
It's such a difficult situation for anybody who is in the know to try and explain it to him, because he's just so defiant about how it stands, right? So I wonder how this one's going to fare. We'll certainly have to see how things go on that front. Very quickly, just a random one very quickly as well. MTN Nigeria, that going officially with regards to the listing today. It doesn't necessarily change things for them, does it? Do you think it betters maybe the relationship? Because they're not raising money from the listing in Nigeria.
So I guess the idea is that if they are listed in Nigeria, so there's probably there are two reasons why you would do that. Firstly, price discovery. So it places an actual market value on MTN. We believe it's about $5 billion today, but we don't have live pricing from Nigeria. It's super expensive. And then the other thing is that because the company is listed in Nigeria and the Nigerian Stock Exchange will effectively be driven by moves in MTN. It's going to be the second largest company in Nigeria, or the listed company in Nigeria after Dangote. The Nigerian government has a reason to be a little bit more circumspect in the way that they approach MTN Nigeria. Of course, they can't really put any sort of penalty forward on the MTN group. Their jurisdiction doesn't extend past MTN Nigeria. But now the market depends on it. So it'll be an interesting dynamic, but I think that's probably the thinking behind it.
Yeah, I suppose it sort of helps in the context of everything as well to understand where exactly they sit with regards to that. Okay, then we're going to jolt over very quickly then to head off to the oil price as well. And I want to get to that just because it headed towards $72 a barrel, but at some point it was looking very close to $70 a barrel. And it just seems to be vacillating between the two areas. I'm not sure where it's going to stand. Yes, Donald Trump does have some say by the seams of things, but also the Middle East is certainly hurting here, isn't it?
Yeah, it seems to be kind of a trade-off between geopolitical issues in the Middle East, and then you also have US stockpiles on the other side. US stockpiles quite high, which usually puts downward pressure on the oil price. But two very successful drone strikes in Saudi Arabia on their oil lines, just spooking the market a little bit in terms of supply and whether or not there might be an issue going forward. Generally, these drone strikes are thwarted before they actually are executed, but this seems to have been quite sophisticated, and that spooked the market a little bit, which sent the oil price higher. But then again, today we've got news that US stockpiles are picking up and oil price
Oh, man.
kind of pulls back again.
Where you make sense of it all. Does this mean then you still maintain a long-term view when it comes to your investments, your markets, whether it is you being bullish on things like gold, on oil, for example? Do you sit for the long term, considering the moves that are just jolting around at this point in time?
So when markets are this volatile and commodity prices are this volatile and the oil price is this volatile, it's the only thing you can do.
Yeah.
You need to look through the noise and you need to look past the tweets, because if you're going to dictate your investment strategy based on short-term movements and the whims of the US president, you're going to come second.
What is long term then? Is long term longer than Donald Trump is in is in office for, or is that literally around 4 or 5 years?
It's 3 to 5 years, and basically it's a long enough time for the fundamentals to actually start playing a role in asset prices, and for it to not just be influenced by short-term movements. Again, in 3 to 5 years' time, you might have a situation where Donald Trump is still in office and he tweets something ridiculous on the day that you're looking to divest. Then you probably should hold on to your investments a little bit longer. But generally, I think a long-term view is the only thing you can do when markets are this messy.
And the United States markets, then, those are also back up now, following, of course, this whole situation with regards to the trade war. You have Stephen Mnuchin saying he's going to go now to China and actually have a chat with them there, having thought that initially they're going to wait out till June. Is the U.S. economy resilient enough to keep going with these tariffs and more resilient than the Chinese economy?
So I wouldn't say that any one of those economies are more resilient. I think the Chinese have a few extra levers to pull in terms of stimulus, particularly from a fiscal perspective, because their debt situation it looks from an overall debt situation at a state level, it looks okay, even though municipal debt is quite questionably high. And then from a monetary side, they also have a bit more headroom. In the US, they don't necessarily have that many levers to pull, but the US economy does look quite healthy still. The jobs market is quite buoyant presently. Some of the high frequency data that we're getting is pointing to quite a stable economy at the moment. Similarly, in China, even though you've got quite a bit of volatility in high frequency data, generally data looks okay. So I'd say both of them are in a decent position currently. The reality is, though, that a trade war is really, really bad for growth, and that picture can change pretty quickly.
And a recession could be on the way for the United States. Who knows? We'll certainly see on that front, and we won't call it, but we'll certainly be here to report on it.
Yes.
That's for sure. Chantal, appreciate the time there. Chantal Marks from FNB Wealth and Investment, helping us unpack that market picture there across the globe. A whole lot happening, as you can tell, of course, with positivity, however, reigning supreme for today's market on the Johannesburg Stock Exchange. Will it end that way? We'll certainly keep a touch of that and keep abreast of it right here on SABC News. Do stay tuned. This is On Point, but for now, that's where the buck stops.